Welcome to Invest Out West podcast. I'm Nat Micken.
And I'm Carlia Micken. We are a husband and wife team who live and invest in Western Queensland.
Join us on our journey of creating passive income through mindset, business, crypto, and property investing. Welcome to Invest Out West episode number 54.
The quote we'd like to leave with today comes from Lauser, where he says, "Those who know do not talk, and those who talk do not know."
Yeah, so today's episode is just a wrap-up of the year. This is going to be our last episode for the year, so we're just sort of going to have a bit of a chat between us and talk about what we've achieved for the year and what we haven't achieved, I suppose, more importantly. Yeah, it's been a bit of a wild ride this year. Yeah, I suppose we start off with the crypto market. I guess that's probably the main reason why it's been a wild ride for us.
Yeah, I think a lot of the ambitions that we started out with earlier in the year was sort of stemming from the results that we were expecting to pull from the crypto market, and of course, you know, the crypto market has not performed at all like the expectations were saying that it would, and so of course all of our ambitions that we had simply just haven't happened because we haven't pulled our profits out.
No.
Yeah,
it's we've gone dismal if anything. Like from what we put a fair bit of money in early in the year on top of what we already had invested. Just simply because like the blow off top phase in the crypto market was projected to sort of happen like middle of the year.
It should have been well and truly over and done with. We should have been talking about, going back into a traditional bear market.
Bear market at the moment.
We haven't even, seen the fulfillment of a bull market yet. So, pity help us if this is the start of the bear market, because it's caught, absolutely everybody off guard. There wouldn't be a single person who saw what was coming this year. Even if they say they saw it, believe me, nobody saw, what the crypto.
It was either a fluke or they're lying.
Yeah. Yeah. So, but I guess I think, with every experience that we go through, we can look back and say, well, this didn't happen and that didn't happen. But I think we've got to really analyze and look over, like what could have we done better? And I guess the question that we've got to ask ourselves is, were we too heavily weighted too heavily reliant on the returns of crypto to get us to where we wanted to be?
Yeah.
And I think that's sort of what has happened a little bit. Like, we've still done a lot this year, but there were things that we had written down that we had, projected that would happen, but that of course haven't come to fruition purely because we haven't pulled our profits out, to this point.
Yeah. No, it's a good point, because it just proves to us, because we're always, very, very heavy on the topic of diversification. And I think it's even proved to us even more so that diversification is what it's all about, really.
Yeah, that's right. And we are significantly diversified. Like, we've got sort of wealth in a lot of different assets, across our portfolios. But I think I think that the things we wanted to do was we were relying solely on the profits from crypto to sort of pull on more projects and to I guess filter that wealth out into new avenues. And that's what hasn't really happened. Like don't get us wrong, we're still extremely bullish on what crypto can do to change our lives and how it can pull strings to grow wealth and prosperity. But this market has just been so different to what everyone anticipated, and even to what everyone projected, and it's caught absolutely everybody off guard. All our crypto coaches, all our fellow students, even head honchos on YouTube, even how do you say his name,
Raoul Pal.
Yeah, even he's been caught off guard, and like he's a heavy hitter in the finance markets. Even Mark Moss, all these people they just haven't seen that they didn't see what's come out this year, and it's just sort of caught everybody off guard.
Yeah, I find like a lot of who we follow on YouTube and that sort of thing, they were all saying, like, up until probably like a month or even say 2 months ago, but it's probably even up to a month ago really, they were saying, this time's not different, it's still the same and all that sort of thing, and don't worry. But now the penny started to drop with a lot of people that they actually saying, yeah, rightio, I think this cycle is different because there's so much talk now about the cycle still finishing next year. By mid next year, like that'll be the blow off top phase for the crypto market, and so that is completely different to the normal 4-year cycle that we know of. So whatever happens from now on is different.
Yeah, and this is the thing too, is that these chartists that we follow, specifically on YouTube, so they're only looking at they've only sort of got that. Not even 20 years of data to look over. And what we've got to remember is 4 years ago in the last bull cycle was COVID, and it was a totally different dynamic. Like the money printers were turned on in the US, and they printed a phenomenal amount of cash. Then that was able to flow back into the markets. And so it's like crypto's only had four proper cycles, 4 yearly cycles, and one of them was COVID. So there's not a lot of data to look back on, and I think that we just sort of got into this lull of complacency to say, well, this is what's happened, this is what to expect. But there's been different instances in this particular cycle, in this stage of life that we're in, the likes of the ETFs flowing in, and with COVID being 4 or 5 years ago, that was a new spanner in the works. And so I think it's just sort of thrown everybody completely off because we don't know how the market's going to play out. But I think, once we get down the track a bit, people will be able to look back and say, oh, well, this is what happened. That's what was going on, but it will all be in hindsight. But I think it's just a case because we're still, Bitcoin is still finding its feet, so to speak. But even though we say that this, the crypto market hasn't performed as per our own personal expectations, it doesn't change our perspective and our deep conviction on Bitcoin and cryptocurrencies for the long term.
Long term. It's we're still very heavy in crypto for the long term.
And we still have a deep conviction on how it can change your life and how it can grow your wealth and how it can bring prosperity. And so it's just the short term because everyone's just sort of grasping at straws trying to figure out what the market's doing and where we're going and how it didn't go to plan, so to speak. Yeah,
and I think it comes back to what we talked about on the podcast after the crypto convention, where we talked about a lot of people at the convention were sort of saying that they realised now that they were too heavily in altcoins and that they should have been more in Bitcoin. And I think that's really comes back to what we're trying to point out here as well, is that we're still very bullish long term on Bitcoin. Because Bitcoin, like over time, Bitcoin always goes up to the right, and so that's only going to continue to keep happening as far as we can see. It's I think that's the big takeaway really is to be more heavily in Bitcoin and for a longer time frame. A longer horizon, and not just sort of be so focused on getting rich quick from meme coins or something that's that is very risky even in crypto standards, really.
And see, I think that this is the point of how this cycle is different to previous cycles, because in previous cycles altcoins with very, very low market cap would be able to perform phenomenally. It wouldn't take much to move the needle, and there would be multimillionaires made instantly through investing into altcoins in prior cycles. But what we're seeing in this cycle is the people that I follow, what our coaches say is to be very, very, very careful about investing into altcoins that don't have a significant market cap, because there just isn't the liquidity slushing around to make the altcoins in particular take off and do what we call their alt season. And so that's the difference. Previously, altcoins performed marvelously, but this cycle again different, and this is what they're doing. They're simply not performing up until this point in this cycle.
It just keeps coming back to what we sort of started to say, that it's got everybody really bamboozled why it's happening the way it's happening. So I suppose it's probably pretty good time to
Yeah, we move into next year with the same. We move into next year and take all of our ambitions about what crypto is going to do for us into next year
see whether we can do it then as well.
Yeah, we'll see how we can go with that one.
Yeah, so I suppose what we might do is start to talk about what we've actually achieved rather than what we haven't achieved.
Yeah,
we'll lighten this mood a little bit more. So I suppose we mentioned about our property buys that we've done this year. So we have bought two more pieces of property. One of them I don't think we've really mentioned.
No, we haven't spoken about on here. No,
on the podcast, because it hasn't happened all that long ago that we went to settlement on it. Well, the first one was in Clermont. That was, we did an episode on that.
It was in January. So the first 2 weeks of January, and we'd already bought our first property. I think we hit the ground running in January and, had our first buy for 2026 in our hands within the first couple of weeks of that year.
Yeah. So that was sort of a fairly big win. And like we were saying, like we hit the ground running pretty hard. But then, the way the markets went after that, we sort of lost momentum. But yeah, so we kicked the year off with that. We bought the vacant industrial land there in Clermont.
And our first 7-day contract.
Yeah.
Whizzed through on that one. Yeah.
A fairly fair experience for us. And then we sort of fairly quickly then started to set up a self-storage facility on that. That facility hasn't sort of gone, sort of hasn't done anything.
Yeah, it hasn't gone bananas, but it's just been steady.
Been ticking along
steady,
nicely. Starting to fill up with what we've got. We're ready to start expanding more, putting more units in there shortly. So, it's been sort of ticking along nicely. And then just recently we bought another vacant industrial block in Hughenden. And we haven't actually talked about that one on the podcast. We just haven't had a chance to at all. We've sort of there's been other topics that we wanted to talk about, haven't really had a chance to talk about it on the podcast. But that same thing. We just we bought that actually off the Flinders Shire Council. It was a new development and of like a new industrial area. Development that they'd done, and so we bought that block directly off council, and so we haven't actually done anything with that block yet. We're just finding our feet still with everything else going on, but that will happen probably fairly early next year. We'll start to develop that for a self-storage as well. So the plan is to put sort of self-storage on half of it, and then we'll probably down the track we'll build a shed that we'll lease out separately on the other half. So we'll have like a dual income streams coming off the one block. So that's 1 acre there that we bought. So fair bit of room there to play with. And a pretty good deal too. So that has been definitely a win.
Yeah, so just before we move on, I just wanted to sort of touch on that a little bit about how come we come across this one. So just to touch on the perspective of being patient and playing the long game, so to speak. We originally owned land in Hughenden back a number of years ago, but it was residential land, and we had tried to change it over, to put it through a material change of use to get a self-storage facility built on that. But we felt we had a few roadblocks with that, so we ended up just selling off those blocks to somebody else, and we just waited and we'd looked at multiple different blocks to buy. We'd looked at multiple different pieces of land to lease. We spoke to multiple different business owners and just sort of got word out there saying this is what we're looking for. And we had a really good relationship. Well, we still got it, of course, with the local real estate agent. And eventually it got to the point where he just contacted us out of the blue and says, hey, are you still looking for land in Hilton? And we said, yeah, we are. And as it turned out, he had these blocks that had come up because the previous sale had fallen through. And all of a sudden it fell into our lap. And it was, it was just like a great lesson in being patient, because if we had have raised out and bought, for example, some other, more expensive block that didn't really tick our boxes, or if we had gone out and leased land, that sort of doesn't give you security. It doesn't give you like a long-term purpose or use access to certain land. But just because we waited a bit longer and we sort of didn't jump the gun, then this block fell into our lap, and now we've got it in our hands, and now in 2026 we will develop it and make it another, as Nat said, another couple of income streams coming off it.
To your point too. I was actually just thinking about that. It's very, it really proves that it's very important to have good relationships with with people that you're working closely with, like your real estate agents, and people around these local towns, because word gets around. And this is how this just come up. We're actually getting fairly serious about leasing land in Huon to set self-storage up, and we're hitting roadblock after roadblock, and this is how the local real estate agent in Huon, he found out that we were still looking for to lease land, and so he just rang. He actually just sent me a message and just said, are you wanting to lease or are you really wanting to buy? He said, I've got a couple of blocks that have sort of the sale had fell through and that sort of thing. And so, I said, well, where do we sign? Because, that was pretty much exactly what we'd been looking for, really. So, it's definitely a lesson on making sure you have your, your circle of contacts around you. And you close relationships with people who are going to be able to help you in your journey. Yeah, for sure.
Yeah, and I guess we were lucky in a sense with both the blocks that we bought this year. So the one in January in Clermont that we'd done a 7-day contract on, and the one in Hughenden, it was just a normal contract there, of course. But we were both lucky in the sense for both of these blocks. They were relatively quick sales, so to speak. So Clermont, of course, it was just a private sale, and he stipulated that it was to be a 7-day contract, and it wasn't to have a finance clause because that would draw it out. And so we were just in the position at the time where we had the cash on hand and we could commit to a 7-day contract. And same with Hughenden as well. We didn't have to go to finance for that one either. And I think it was just the position that we're in at both those times, the luck of the draw, so to speak, that we're able to pounce on both of these deals as soon as they popped up, and then we brought them into our portfolio. Yeah,
for sure. It certainly speeds the process up if you don't have to get finance and all that, and and the trust, like we had the trust set up ready as well.
We bought them under a trust.
So that was, we already had them, like we already had a trust ready to go for both of them. So it definitely makes a difference when you've got your ducks in a row, and these opportunities. When you can pounce on these opportunities as soon as they come up. So just to touch on that, we're actually, we can't say a whole lot about it yet because we're not under contract or anything, but we are actually looking at a deal at the moment, and it's going to be our biggest deal yet. So we're in negotiations on that, and stay tuned in the new year, because we'll be able to talk about that once we get some things set in stone on that. So, like I say, we're not yet under contract. We're still in negotiation phase, but that's very exciting. That one, it's definitely the biggest purchase that we've pulled on so far. So
and this is it. We've bought 2 blocks this year, but also behind the scenes we haven't been doing nothing. So I actually should have counted, but I didn't before I come onto the podcast. But of how many offers we've put in this year, we have just done offer after offer after offer, and it's taught us a lot about how do you write the offers, how do you speak to agents, how do you try and get them to convey your message to the seller, how do you write a fair offer, and so we we've put in a stack of offers. We've looked at so many different things.
deals this year.
Yeah, right from houses to commercial, industrial. We've looked at self-storage facilities. We've looked at the whole kit and caboodle, and we've just put offers in all the way along the run. Not so much because we want to win every property that we want to put an offer in, but it's more of a case of what can we learn out of this? Like, how can we grow within ourselves, understand when a real deal does come up, the likes of the one that's just been speaking of. How can we have our ducks in a row to be in a place where we can pounce and have.
It's a good point, because this is what I always say is how do you know the difference between a good deal and a bad deal if you don't have things to compare one against the other? And when this particular deal that we're talking about is when we sort of first come across it, that was when I sort of said, okay, this is a good deal. And I think that, I've heard that being said a lot, that that people say when a good deal does come across your desk, you'll know it because there's no denying that it is a good deal, and this one is definitely like that. And it's only because we've, like Ali was saying, it's because that we've just put in so many offers and looked at so many different deals this year, and done so much cold calling. Like, I've done so much cold calling on self-storage facilities, and we did a lot of calling like real estate agents on listings on houses and that sort of in the first half of the year. Looking for our next deal, and so it's all stacked up to build this like a knowledge base, I suppose, of what's a good deal and what's not a good deal, and then when you do come across what is actually a good deal, then you know it straight away. So.
Yeah, and we've done the same thing, not just with property, but we also have been looking at business investments, like purchasing business, like established businesses, and even that's been an amazing journey in the fact of how you go about that. What's the first step? And so we've done a podcast on it a few podcasts ago, talking about getting information and just starting to understand it, starting to read it, and starting to work out the figures and how do you know what to do, so that when a business does come up that really floats our boat, we've sort of got all that. All that hard work done behind the scenes, that when it comes up, we can pounce on it.
Yeah, for sure. Yeah.
So lots happening behind the scenes. We spent a lot of time.
We haven't been sitting on our hands this year.
No, we spent a lot of time doing a lot of research and a lot of book work and a lot of offers. Like Nat said, a lot of phone calls going on. Just laying groundwork. Really. Yeah.
And we wouldn't have got any of these. The two that we've bought plus the one that we've got going on under offer at the moment, we wouldn't have done any of wouldn't have got any of those across the line had we not put in all that work.
Yeah, exactly.
It's in direct relation to how much work that we have put in.
Yeah.
And
and the other side of it too is that, of course, there's always massive disappointments that come. There's things that we've found, when we've been 6-8 weeks too late and the deal has gone through. And there's also lessons in that about, how can I be more proactive about, seeking out these deals and not just, like Nat said, we haven't been sitting on our hand, but, what can we do to improve it? What can we do better?
More. You got to do more. Yeah.
How can we add to this,
There was a self-storage deal that I knew it was there. I knew the facility was there, and I hadn't actually done a cold call or anything on that particular facility. And then, lo and behold, about 3 weeks ago, I realised that it had not long sold. And in between me finding out about that facility existed, and up until that point, it had sold in the meantime, and I hadn't even, been proactive of following through, of cold calling that facility or something. And it was a big lesson to me that the importance of if you think you're doing a fair bit now, then you need to do more. Like Grant Cardone says, you got to 10x. If you think you're going all right, then 10x it. So,
And the last couple of months of this year, Nat and I have been talking a fair bit about, how can we leverage our team more? What can our team do to, like, with all that, like the real time-consuming, mundane sort of work that's easy enough for them to do, to then free up our own time so we can then, work on the deeper and the harder and the more complicated stuff. So there's all these different strategies that are, that we're working on behind the scenes, and we've got a lot of plans, as we go forward.
Definitely is. Yeah, we'd, like you say, you bring up our team there, like our VAs. Like we'd be lost without our VAs.
Oh yeah, absolutely. Yeah. I was saying to Nat, our VA, they had a family situation throughout the year, a very tragic situation, and they just had to go and sort the family situation out. So they just had to walk away from work, and like they were gone for it was probably about 4 business days in total. And I was like a reel in the headlights, because they do so much for us, and because they're so trustworthy, and we rely on them every single day, just to do those things. I simply had no idea where I was or what I was doing or what they did in their day pretty well. I got an idea about what they do. Of course, I'm their boss, but just that everyday stuff that they do. A team is worth their weight in gold. Absolutely.
Yeah, for sure. I suppose while we're just on the topic of next year things, we're actually we're in the process of we're going to have a new office next year. So we've
Jeez, that'll be good.
Yeah, so
it's been a long time coming.
I'll say. So we've purchased the office, but it's yet to get set up here. So that'll probably take. It'll probably take mid next year before we'll be moved into it properly.
We'll be held accountable as to this. We don't want to be here in 12 months' time saying, well, we didn't get our office in. So sort of holding ourselves accountable.
So we'll make sure we have it operational by this time next year. But that's going to be a game changer for us. So
yeah, absolutely.
Yeah. So we're going to be able to do our podcast a lot easier in the new office and all that sort of thing. So
speaking of podcasts, you're going to be adding another lad on that rung too.
Yeah, so good point. So I've decided to start another podcast next year, just by myself, and it's going to be all about self-storage. So the Australian self-storage market, it'll be sort of focused on Australian self-storage. Which there's pretty well non-existent self-storage podcasts in Australia. There could be some that I've missed, but I don't know of too many. So I haven't fully. I've got a name in my head that I've sort of got lined up for the podcast, but I haven't completely settled on it yet. So. Stay tuned for the new year as well for that, for when I release the first episode. So I'll probably release the first episode of that around the same time that we start up again with this podcast next year, I guess. So, so it'll be, at this stage, it'll be every second week, just like this one, that I'll record an episode about the sort of the state of self-storage in Australia and just what we're up to with self-storage and probably have a bit of overseas self-storage news and that sort of thing sprinkled through it as well so just sort of like a bit of an information sort of a thing, I suppose, about self-storage in Australia, I guess. So that's something that I've been struggling with for the last, I suppose, 12 months. I've sort of felt that I should have been doing that, and eventually, probably about a month or 2 months ago, I said, okay, I'll bite the bullet and I'll do it. And I decided that I'd start off in the new year. So. So stay tuned for that one.
And just on my side, I'm not sure whether I've spoken about it so much on this podcast. I know I've spoken about our Everyday Profits Investing Basics course, the course that we released back earlier in the year, February I think it was, the crypto investing basic course that we released. Later in the year, then my team and I, we started to put out YouTube videos and a podcast. As we do with most things when we're starting something new, I think I bit off more than I could chew, and we we've put out quite a few episodes, and we've got quite a few YouTube videos up. But I think as we got busier and busier in the last sort of couple of months of the year, I didn't have the time, I didn't have the capacity to actually film anything, and so we sort of tapered off. But next year we want to have a bit more of a firm strategy now that we sort of know what we're doing and where we want to go. A bit like Nat with his self-storage podcast, I'll have something on a similar side under the Everyday Profits banner, mostly focused a lot more so around mindset, and understanding, the way that crypto in particular impacts your mind and how to handle those emotions. So that's sort of what we're doing on our side. So again, it's watch this space. We'll get some structure in place in the new year, and put more content out.
Yeah, definitely. It's all about content. That's you've only got to listen to Gary Vaynerchuk to understand that the only way to win really is just put out more content. I suppose that's a pretty good segue into next year. Talking about next year, all this sort of stuff. I guess we should talk about next year with the way, like, where we think markets are going to go and that sort of thing. Like it, a lot of the material we follow still points towards that 2026, probably towards the end of 2026, will be going into a bear market for stocks, crypto, everything really. It's sort of looking like it will be a fairly big crash, and we've talked about this on the podcast before because it coincides, like next year coincides with the 18 and a half, or I think it's 18.6 year real estate cycle as well, and so it's definitely due, especially real estate worldwide, I think, is definitely due for some sort of a correction from the trajectory that it's on. It can't keep going just up vertical like it's been, especially in like the Australian market and the American market too, that I think are probably more so than most, really. I think it's very mindful to be ready for the upcoming crash that I think is inevitable to happen by the end of next year. Whether it'll, it mightn't be in full effect by the end of next year. It might be more in effect by the year after, but I think we're definitely going to see some sort of a correction in most assets next year, really.
And this really goes to what we were saying a little bit about before when we were talking about investing. If this projection comes to fruition, the mindset that we need to have today is what can we learn, what can we do, what can we experience today to set us up for 2026, 2027, whenever this projection may come to pass. And so it goes to looking at the likes of Warren Buffett, for example. We're watching what he's doing. You were saying this morning. Yeah,
I was just telling you this morning about. I was watching a YouTuber, and he was talking about how much cash Warren Buffett's in at the moment, and he's about in 60% cash. Now, I've probably been listening to how much cash he's been in probably for about the last 12 months, I suppose. How much cash he's been stacking, and how much of his stocks that he's been getting out of. It just keeps continuing to go up. Now, this particular video I was watching this morning, he said that he looked at how much cash Buffett was in, I think about 2 months ago, and it was like about 50% cash, 50% stocks, and now it's 60-40. So, he just continues to be selling the high and
consolidate.
And just stack cash ready for what's coming. So what my point was there was that if this projection comes to pass, that there will be this downturn over the next few years, and say for example you're interested in the stock market and that's sort of taken your fancy a bit,
what my point is what can you start doing today to prepare if the market does crash? Because we know that when the market crashes, even though there's massive fear everywhere, it is the best time to buy. Warren Buffett's quote says, be greedy when others are fearful, and fearful when others are greedy. So when people are fearful, that's when we've got to be greedy. So when there's a crash, that's when we want to be getting in. And so what can we be doing today in preparation for, 12, 18, 24 months time when the market may be on a downturn?
Yeah, it's definitely that's the time that we need to be more focused on buying even more. Another one of Buffett's quotes says, "Buy when there's blood in the streets." Yeah. And so, because you're scooping up deals you can scoop up deals for pennies on the dollar.
Yeah.
And
this is it. When there is blood in the streets, as Warren Buffett's quote that Nat just mentioned says, you don't want to be caught in the rat race of saying, well, I don't know how to buy shares, for example, or I don't know how to open an exchange account, or I don't know how to, I don't know how to buy property, for example. And this is sort of my vision is what can you do today to prepare for tomorrow?
Yeah, definitely, because there's
always work to be done.
Yeah, like you say, it's you don't want to be, and this is what we were talking just before about having our ducks in a row when the likes of this deal come up on the Clermont property, and he wanted a 7-day contract, and it was only because we had our ducks in a row with the trust story set up for such an occasion and that sort of thing. You want to be doing them sort of things before, so you're not having to waste time in the moment, really. So, yeah. Yeah, that pretty well sort of wraps us up, I suppose. I guess the only thing I wanted to talk about was left, I suppose, was what material that we're studying at the moment. So, do you want to kick off with what books you're reading at the moment?
Yeah. Well, I'll just start by saying going back to our ambitions for the new year, back at the start of this year, my ambition was a book a month. Well, I was going great guns until about June, and then I fell off the bandwagon. But at the moment, I've only actually read 6 books. I'm on to my 6th book. It's taken me a long time to get through my 6th book. I don't know what happened, but anyway, I'm just reading.
So you went, instead of doing one a month, you did one every 2 months.
Yeah. Well, I done one a month to start with, and then we lost momentum. I'm not sure. Yeah, something happened in there, and I just sort of lost my way a bit. But currently reading the Psychology of Money by Morgan Housel, and it's quite ironical to read this, being psychology and talking about falling off the bandwagon. But it's a really good book to read just to get a grounding about how does our mind work around money and how to leverage it as such to work to its full potential. Yeah. But just before I go back to Nat, there's just another 2 books that I did read that I would highly recommend that people do read, and I do intend to reread these. One, of course, is The Power of Your Subconscious Mind by Dr. Joseph Murray, and the other one is The Secret by Rhonda Byrne. They were 2 books that I really, really enjoyed reading in 2025. They're much on the same that they dance to the beat of the same drum, in the sense that it's all on psychology and the power of your mind, and even manifestation and those such things. But yeah, they really float my boat, and that was my recommendation. Would be those 2 books would be first and foremost.
Yeah, I actually didn't sort out a list of the books that I've started this year. I've started a fair number of books and I've got sort of a little way through them, and then sort of bit like Ali was saying, I sort of fell off the bandwagon a bit, and sort of try another book and that sort of thing. And one of the podcasters I used to listen to, he doesn't do a podcast anymore. Frank Flegg was his name. And he was very much of the mind that he often talked about, saying that it's not about finishing books or seeing how many books you can read, but how much you can get out of a book. So
yeah.
he used to be a big advocate of saying, if you're not feeling it with a book, then don't keep persevering with it. Just discard it and move on to something that you're actually going to get some benefit out of. So I did that a fair bit this year. I started a few different books and just wasn't feeling it. But the book that I'm reading at the moment, and I fully intend to finish this book because I'm really into it. It's called Positively Geared by Lloyd Edge, and so listeners of this podcast know that we're very much about cash flow and positively geared properties and that sort of thing. And I actually saw this book advertised on Facebook. And so the heading, like the title itself, sort of pricked me interest, because that's sort of that's the line that we're on. So yeah, I started to read this book not all that long ago, only a few weeks ago, and so I'm sort of I'm fairly deep into this book now, and so but yeah, it's all about really what the title is, like how to buy positively geared property, and how to make a property positively geared, and how to force a property into being positively geared. And yeah, he talks a lot about development as well. So buying, like his strategy a lot is to buy buy vacant land, and then put a duplex, like build a duplex on it, and then what he'll often do is sell one side. So like he'll build the duplex and then subdivide it in half, and then sell one side off. So then that makes the other side that he keeps as a positively geared hold. So just as a long-term rental. Then so yeah, that's definitely something that's really pricked my interest. Something that I'd like to really get into moving forward is to do this strategy that he does. So yeah, so that's my recommendation of a book. Yeah, do you have anything more?
No, I
just
wanted to say, just while we're speaking about books, just as a sort of a closing comment, most people would know is that we, like this podcast, we do for free. We give out all the free information. We share our stories for free. We haven't started taking any sponsorships, and so our podcast isn't technically monetized as such. And so I just wanted to say that what we'll do is I'll leave probably just an Amazon link in the description of the podcast. And if these books float your boat, we'd be deeply grateful if you were to use our Amazon link, because we earn a small affiliate. We earn a small commission through any book sales that we make. And that way it just sort of, contributes to, our time, to our team's time to edit the podcast, to post it, to do all our management stuff. So that was just what I was just going to say there. Yeah. Yeah,
for sure. Like Kelly was saying, I think we sort of give out a fair bit of information here. That's probably useful to some people. Mightn't be useful to anybody, but But yeah,
you're welcome to email us if you've got a suggestion about what you want to hear. You can flick us an email. My team managed all the emails, so yeah, flick us an email. Let us know.
Let us know what you're thinking.
If there's a topic you want us to cover, we can decide then whether it's something that we feel like as though we're what's
able
the word?
To talk on it.
Worthy of speaking.
Yeah, worthy to talk about it. Yeah. I think that's probably about all we really had to talk about, I suppose. It's just, it's just going to be our last episode for a little while. We haven't really decided when we'll start another episode, but it'll be sometime in
January.
January. So, just keep your eye out for our next episode, and just wanted to sort of take this opportunity to wish everybody a Merry Christmas. And,
absolutely.
And all the best for next year. And
just to say thank you for being our supporters, for following us, and for listening to us, and helping us grow every fortnight that we put out a podcast.
And
share it around.
Share our
leave a comment. Send it around, and we'd be deeply grateful. Yeah,
and definitely keep your eye out for our new content coming out. In
2026.
In 2026, because like we were saying, we've got more podcasts and stuff that we're going to be focused on. So I think that's about all.
Merry Christmas, folks.
Merry Christmas to everybody, and keep living the dream.